Hello, everybody. Happy Wednesday and welcome to the show. My name is Jason Kretzky, and I'm going to be your host tonight for this very special masterclass. Now, tonight we are going to be learning the secrets to trading futures using Fibonacci levels. And we've got an excellent teacher in Rich from Trading Warz as our guest to teach us everything that we need to know. So, Rich, my friend, how are you doing tonight?
I'm doing great. Thanks so much for having me on. And I'm just looking forward to dropping some educational bombs. So make sure you guys strap in your seatbelts and get your notebooks out.
Awesome, man. Well, we're so happy to have you. We've obviously worked with you for some time. We've incorporated your Trading Wars Golden Indicator into the TrendSpider platform for all of our users to take advantage of. But I assume that most of the folks that are here tonight are probably pretty familiar with you, at least to some degree. But for anybody who's tuned in, who's not familiar with you and your work, your trading style, maybe you could give us a little background on how you got your start and how you like to trade.
Yeah, no, and that's thanks for the introduction there. So when I first started trading, just like pretty much everybody, I blew up my first account, $20,000 trading options, buying breakouts, just following random news and Twitter feeds, just thinking that I knew more than people that have been trading for longer than me. When you first start off, you might get lucky once or twice, but having a real profitable system is the only thing that's going to make you money in the long run. So after that, luckily I met one of my mentors who was my friend from high school. He had dropped out from school and was trading full time. And I was really skeptical at the beginning because I thought no one can actually be making money in the stock market, because I came from a background in a culture where weren't brought up to invest and do things like that, coming from an immigrant family. So I had to break that paradigm when I was young to understand there's opportunities out there if I'm willing to learn and apply myself. And that friend got me into futures about 7 or 8 years ago now. And while I was trading futures, I was also pursuing my CPA. I got my CPA. I worked in asset management. I worked in private equity for a long time, and I started to learn a lot about the markets. And over time, I've been able to develop a strategy that I think is in tune with what a lot of institutions use, which is pretty much robotic algorithm Fibonacci based trading. And that's kind of like why I'm so inspired to share with everyone, is because I really think that if you follow, the principles and the risk management, that anyone has a chance to succeed in the market, whether you're a day trader, swing trader, or investor.
Awesome, man. What an incredible story. Well, we're very, very fortunate to have some great friends at the CME group, and we've added live futures to the platform with their help over the past, I don't know, within the past month or something like that. So let's dig in here. Let's talk about some basics first for anybody who's not familiar with futures. Maybe tell us a little bit about them, why you like them, why you prefer them maybe to trading the SPY or the Qs, and give
Yeah,
us just a little bit of breakdown there.
definitely. So right now, the futures market is open, and you can see right at 6 o'clock, we had that gap down off of probably Facebook earnings, and now we're kind of rallying back. So, even here, you could see we have an indicator, one of my golden indicators with a short setup that's paying out right now. So this thing is always open, and that's what gives it an edge, in my opinion. A lot of people don't have access to trade during regular trading hours. And I have a lot of people that work with me from Singapore and different places around the world, UK, and they trade overnight. And that's kind of like what drives the S&P 500. So the S&P 500 is, top 500 companies in the US, and there's different ways to trade it. So one of them is trading the ETF, which is SPY, which also has options, SPX, and then you have the futures, which is ES. So ES, the way it works is on a point system. So for every point, you can see the points are over here. So for every point this moves up or down, it's a $50 swing. So when I first started trading, this was all that was available. But actually right now we have something called MES, which is the micro contracts, and every point that this moves is actually $5. So it's 1/10 of the full size contracts. And that's something that I always recommend new traders to trade, because nowadays there's so much There's so many tools that new traders can use. But basically, the futures market is what causes gaps in the regular chart. So if you look at SPY, you'll see a gap here. Sometimes you'll see some massive gap ups, you'll see some massive gap downs, and that's basically from the overnight action of what's happening in the futures market. And like I said, some of the main reasons I like trading futures, first of all, it's cheaper in terms of taxes. So the overall capital gain taxes on futures is cheaper than options or trading ETFs. And that was something that really caught my mind, because when I spoke to one of my consultants about it, they basically said that someone designed a separate act in the tax act for futures gains or losses. So that kind of lit a bulb in my head that, hey, maybe there's some kind of secret thing that's going on around here. Like maybe there's some edge. So that's where another thing that kind of inspired me, the overnight trading. And I just like to say it's pretty much like options on steroids. You don't have any of the Greeks, you don't have any of the decay. So like if I were to buy right now, let's say 3856, let's just say, if it stayed like that for the whole night, I wouldn't lose anything. I would still be at break even. So that's the part I love the most, because sometimes you guys know when you're trading options, even if you're in the right direction, if you overpaid for the premiums, you can still lose on the trade.
Right on. So, all right. So we want to talk about strategy here. We want to talk about how you trade using the fibs. But in order to understand kind of like how you're thinking about the day to day, we really need, I would assume we really need a big, broad overview of kind of like where we are relative to have an understanding of how to think about our day trades, right? We want to know where we are in the big picture. So how are you feeling about the markets right now? Where are we? What are you thinking about?
All right,
What's
that's a great
influencing your
question.
trade ideas?
Yeah, so right now, I've been saying this for the past few weeks that, if you look at the average size of some of these candles, some of these candles are extremely large, and there's a lot of volatility for day traders right now. When I day trade, I am neutral. I go long and short maybe 2 or 3 times in the same day. Doesn't matter. We're just trying to make as much money as we can day trading. But when we look at the bigger picture, we start to see, setups for longer term swing plays or investments. And those are things that I deal with separately. When I day trade, I don't care. I'm just going to make as much as I can. And what we see in the market these days is just the increase in volatility. And that is a day trader's heaven. Because the more volatility, the more potential money we can make on any given day. So like last week, I made probably one of my best weeks of the year, around $15,000 in profits. But that's just because the average day, you can see the candles are so massive. You can get 100-point day. 100 points on one contract is $5,000, right? So, you don't normally see that. But now that that's an opportunity, now that that's what's going on, I feel like that's something we need to make as much as we can while that's occurring, because definitely the volume will slow down probably in December, and just coming out of August, there were times where we weren't moving at all. So, I always like to watch the candles, how they're forming on the daily, to see if there's a range that's tradable. But in terms of just looking overall, so I always like to start off with the weekly or the monthly. So we'll start off with the monthly here, and we'll just look. We had our COVID low back here in 2020. And if I just take our fib right over here and I take it from low to high, you can see that we actually tagged the 50%. So I'm just going to go ahead and add my 50% right here. We tagged the 50% retracement and we popped up. And, that's, if you think about it logically, what do these Fibonacci means? Well, 50 means 50% discount. Okay. So, if we moved up $200, then 50% is $100 back, right? And large institutions are always looking for a deal. That's where the big money plays. Retail is always buying at the top, but the institutions are always waiting for a deal because they have a lot of money to move. And if you have a lot of money to move, you can't afford to buy everything at the top, right? So we were able to capitalize on this first 50% drop, and it's been popping right back up. And if we go back to the daily now we start to see that we're actually in the short Fibonacci. So this will happen a lot, where you'll have two Fibonacci's trading against each other. So the bigger picture, the bull Fibonacci is trading. And then if we go here from this last swing high down to this low here, we actually tagged the 618 today. And that's something I was speaking to you yesterday about, Jason, is you asked me like where I think we're going to. And I said, probably when we hit the 618 right over there is when we're going to see some type of reaction. And we actually tagged it today on the 5-minute chart Right up here, this was the 618 from the daily, and you could see that we start to already sell off a little bit. And it's really nice to have sometimes those higher time frame fib levels when you're day trading, because usually they give a good reaction to make, you know, even if you just want to scalp it for high probability, you can do that also.
Right on. Yeah. So then let's kind of dig into the nuts and bolts of how you're using these on a day-to-day basis. Like walk us through the process.
Great. All right. So I'm going to use the last 2 days as examples. These are the trades we took in my Discord with my team. And I'm going to first walk you guys through the basics here. So here's your Fib tool in the bottom left right here. So we can draw it from low to high like this, or high to low. And all I want to teach today is the 618. There's a lot of advanced stuff, but let's just focus on that for anybody that's new. And basically,
Can we talk
yeah,
real
go ahead.
quickly why the 618?
Yeah, because the 618 is 61.8% discount. That's the way I like to look at it. So if you're a new trader, you want to get a good deal, right? And that's where most traders fail, is because instead of waiting for a pullback to get premiums cheap, or whether you're trading options or futures, they buy at highs because of FOMO. You know, FOMO is the biggest killer for accounts. So I always recommend at least get a 61.8% discount. And then I also use the 786. But I don't want to confuse anyone, so we'll just start off with the 61.8. So the basic concept here is, you know, we have a vertical move, or we're either going to go up or down, right? So I'm going to use today as an example. So oops, not that one. So normally what we do is we could separate the Fibonacci's into a few legs. So we have our morning leg and our afternoon leg and our opposing leg. So those are the 3 legs that I always play. The morning leg is basically the first 10 to 25 minutes. And it usually develops, you could see right here, we had this push up, right? So I usually wait for at least 2 candles to understand what direction are we moving in, right? And right here at 9:35, so just pretend you don't see anything to the right, we had a clear move up. So I'm actually going to pop into my Discord just to show you guys like how we draw it up there. So that was our first 2 candles of the day. And obviously you don't know what's going to happen to the right. So what we're trying to do here is, if we zoom in on these 2 candles, is we can see that we had a vertical push up. So what a lot of new traders will do is, as soon as this candle closes here, they're going to start buying, because they start to feel like, well, the market is going to explode. It's going to go without me. I'm going to miss everything. But what we try to teach at Trading Warz is use your Fibonacci tool and get the discount. So if I put my anchor from our low to our high right here, what we did is we waited for this 618. So our 618 is our entry, and this makes sure that we get a discount, right? This makes sure that we're not overpaying, because we're letting price come to us. So right after this candle, we had a big red bar. And when we came down here and tagged our 618, if you're trading options, it's even better, because the call premiums are going to be dropping when this big red bar comes in, right? So we go ahead here, we buy on the 61.8, and I'm going to use this risk management tool here. So we buy on the 61.8. We put our stop loss at the swing low like this, right there. And our targets are, there's various targets, but let's just keep it simple. The target for a new trader could be just a new high, right? So get back to the old previous high. So if we were to just look at that from a risk to reward perspective, that's about 1.6 times your money, right? And what I like to really push to new traders is try to get it to about 2 times your money. So which is pretty much right there. And as you have more size, you can continue to scale out and leave runners on. And that's what I do now, because I usually trade with a lot more size. I can scale out at 2 times my money, and then I could keep going. You could see the absolute high today we got to was about 7.5 times our money. So why is that important? Why is that risk to reward tool important? Because if you take 100 trades and you go for 2-to-1 risk to reward, you only need to win 34 out of 100 trades to make a profit, right? And that's why I love the Fibonacci, because the risk to reward is built in. There's no guessing. You're buying the pullback, you're going to sell into a new high, let's say, you're going to make double your money, especially if you add the 786, you can make way more. Sometimes we make 10 or 20 times our money in one trade. And that's what makes you profitable. Because if you take 10 trades, you win 4 out of 10 with the Fibonacci, you're going to be profitable. But what most traders end up doing is they buy breakouts. And if you're wrong on a breakout and that doesn't work, you can blow up your account. And
Right.
because your risk to reward is inverted, it needs to work right away. And you know, we could just look at an example right here. So let's say all of a sudden now we're buying up here on this breakout. Now let's say our stop loss is back at the same swing low. So now all of a sudden, to get to 2 times our money, that's never going to happen, right? We're asking for too much from the chart. So that's what I love using the fibs for, is to make sure that I'm getting a deal. And I'm going to go to yesterday too, so I can show you guys another example of that.
Real quickly, before
Yeah.
you get into yesterday's example, why are you using just the first 10 minutes of price action? Is there a specific reason for just using the first 10?
Yeah, so I like to separate the day into like the morning leg or session, and
Okay.
then the afternoon leg or session. That's the 2 broad ones.
Okay.
So generally within the first hour of the day, you're going to have a clear direction. It's either going to be up or down, right?
Okay.
So if it goes up, we're buying the dip. If it goes down, we're selling the rip. So we just take that first direction and we're saying, okay, this first push up here, I'm betting that there's an algorithm that's backing this move. And when it comes back down, I'm going to buy the dip because I'm confident this algo is going to be there to shoot it back up, right? And if you're trading it in real time, like we were trading it live in Discord today, when you see these candles, it's like, it's crazy because you could see it literally when it touches the level, it just spikes right back up, like boom, right? And that's one thing when you trade it live, you could really see how the algorithms are in the trades, because it, you know, we'll be going sideways, we'll be going sideways, and then you touch that 618, you touch that 786, and bam, it just crushes right through. So so that's the first part of the day. That's your morning leg. That's usually between the first hour, and then later on between, I say 11 to 1 o'clock, you'll have an afternoon leg. So you could see here, this is our afternoon leg. This is right around 1 o'clock. So today on the afternoon leg, if we take it from the full low to high like this, you could see, you know, there wasn't really any sustained bounces, but you could see when we touch a 618, we're popping up. You know, they were trying to like take it back up, but in this case, it wasn't strong enough. So it's not always going to work, but it still gives you that good opportunity from a risk to reward perspective. And then the last thing is the opposing leg. So the opposing leg is the most complicated one. It's the one that I I leave for my advanced traders, but it's probably the one that can make you the most money. So the opposing leg is basically, okay, so if we're going bullish, like see, we're going bullish up here, the opposing leg is looking for the reversal. And I know a lot of people love trading the reversal to make a lot of money. So, you know, you might look at this chart up here, you might not see anything, but I can see a lot. And I'm just going to show you what I mean by the opposing leg. So if we start from this high right here, and we just take it down to this little swing low right there, you could see we had that 618 rejection, and then that took us down, and then we can just continue to do this sequence all the way down. So I'm just going to continue right here. So that's our first one, high to low, and then we can continue. Oops, wrong tool there. So if we can go from this high and bring it down to this low right here, another 618, right? So these are little like tiny Fibonacci sequences that you probably will not be able to see with the naked eye. And then even if we just take it from this anchor, this anchor, and we bring it down to here. So this one was probably more like a 50% instead of a 618, but I love to trade the 618s mainly. But pretty much all of these little pullbacks, if you were to actually do a deep analytic on them, a lot of them are just coming back to the same Fibonacci levels. And that's because the market is pretty much just robots taking these trades. And even if you were to look on this first candle, if we look at this first one right here, if I take the Fibonacci from the low to the high right here, low, high. So this right here is probably a 50%. So if I just add it right there, boom, 50. So, you know, pretty much right on that 50. So what you want to do though, as a new trader, is you don't really want to mess with the 50 because it is a good deal, but it's not good enough. I want to make sure that you get the best deal. So some trades you're going to miss them, but if you get the best deal, that's how you're going to stay profitable.
Got it. And so, well, actually, before you go to the next piece, because I know you said you wanted to show us an example from yesterday.
Yeah.
If you're just tuning in, we're hanging out with Rich from Trading Warz. If you are not yet a TrendSpider user, but you're interested in becoming one, we've got a 35% discount available for you guys tonight, just during the show. You can get that code in the chat. So help yourself to it if you're interested in it. All right. Yeah, Rich, back to you.
Guys, I'm just going to jump in real quick too. So I know I was talking to the team about this, but I do live streams pretty much every day at 9 p.m. And, you know, to celebrate this video here, I'm going to be doing some giveaways on my channel right after this. So if you guys are interested, you could hop over to the Trading Warz YouTube at 9. We'll do my daily stream and I'll do some giveaways for you guys if you guys are interested.
Awesome.
Thanks. So just back here, you know, something that I forgot to mention was just how we actually do this on futures. So, you know, I was looking at the SPY chart the whole time, but basically the S&P 500 and the SPY and the ES chart are the same. So you could see here was the regular price action for futures, right? So I always do my analysis on SPY. And the reason why I do my analysis on SPY is because when I trade futures, I don't care about the overnight price action. Some people do, but I don't, because I feel like it complicates things too much, right? But I could just look at the futures chart right now and I could show you like 100 fibs that happened overnight. But, you know, also if you do that, you will burn out at some point. So I try my best to just stay to regular trading hours, because we're doing a marathon here. We got to trade, you know, 300 days a year. So if you start looking at the overnight session, you start trading the overnight session every single day, and you stop getting your sleep, at some point you're just gonna blow up. And that actually happened to me. So I always tell people, like, I like to focus on RTH. So you could see right here, this was the same morning session. So let's count the points. Okay, so let's look at the potential here on the points. So go back to the risk reward tool. So our 618, let's go ahead and draw it up too. So oops, on this one, I have an even different setup here. So right here, that was our 618 right there. And I'm just going to take it down right there. Okay. So let me just remove this one here. All right. Okay. So let's talk about the potential here. So into a new high, it's right around here. And then this was the maximum on the day. Obviously, you're not always going to get the maximum on the day. But if we just look right here, so our entry right around, let me just hover over it, right around 38.42, and then into a new high is about 52. So that's 10 points. That's what you kind of normally see on a day. Like you on a Fibonacci, you're risking 5 points to make 10 points. That's like generally what you'll see. So risking 5 points is risking 250 bucks, and getting 10 points is making 500 bucks. So that's your 2-to-1 right there. So that's, you know, futures is the tool we use to trade the S&P 500 through futures. The main benefit, again, like I said, is if we go sideways all day long, you're not going to lose money like you would in options. And if the premium on the options are extremely expensive, sometimes even if it goes up, you still lose money, right? But you don't have to worry about that with futures. They just treat it on a point-based system, right? The only downside is there's margin involved. You can't have a cash account and trade futures. And I think that's why some people have not kind of opened up to it. So you definitely need a stop loss when you're trading futures. It's like a really highly leveraged instrument. So it gives day traders a lot of opportunity to make money, but it's not just like, hey, I bought an option contract and it went to zero. That's not what happens in futures. You can get margin called, right? So obviously with the pros, there's some cons as well. But yeah, so that would be an example right there. So we risk 5 points to make 10 points. There's your 2-to-1. And if you have a lot of size like me, then you can say, hey, I'm going to take some off at 10 points. I'm going to take some off 15, some off at 20. And then you just like keep playing that game in your head, where you're allowing yourself to get multiples of your risk, because you know, as long as you're above 2 times your money, or even 1.5 times your money, you're in a sweet spot where you don't need to win 50% of your trades, right? But what I see personally with a lot of traders is they buy the breakout, they make 2 points. Let's say they make $100, but when they're wrong, they lose $500. So no matter what they do, no matter how good they are, no matter if they're perfect for 90% of the trades, they're still going to lose money just based on simple math.
Right. So let's check out that example that you mentioned you were going to show us from yesterday.
Yeah. And the reason I really want to show the example from yesterday is because it takes into account the golden indicators and my patterns, right? So we had the same situation yesterday. We had that 930 candle was a very bullish bar, and then we had an inside bar, and then we had this outside bar. So for anybody that doesn't know, my indicator highlights all inside and outside bars, but the patterns that I love to focus on the most are the blue highlights and the yellow highlights. That's why I highlighted them. So the blue is called the Nirvana, the yellow is called the Holy Grail. So they're just the opposite of each other. So inside, outside is Nirvana, outside, inside is Holy Grail. When we see these patterns lining up with the fibs, it gives us even more confidence, because these patterns are usually an indicator of the next leg, right? So once that pattern breaks out, that's where we can see the next leg. So for example, we did this trade together back yesterday. We took our Fibonacci from our low to our high like this. You could see we tagged our 618 right there. But not only did we tag the 618, but we also had the candlestick confirmation, right? And in my book, I always distinguish, there's two ways to trade the fibs. You can either get on the level just blindly, you can just take the level with a stop loss, or you can wait for a candlestick confirmation. So this is when we combine everything together. We have the Nirvana. The Nirvana is a good indicator of making a swing low. And you can see once we broke the high, we squeezed up, right? So I love using them and stacking them together. I find that it has a really, really strong edge.
So what's the strength and or, well, not or, but what's the strengths and the weaknesses of the Nirvana pattern and the Holy Grail pattern?
So so if we go back to this, the main difference is, if you were to buy right here blindly on the 618, you would make more money, right? Because you're buying here instead of waiting for the candle to close. But that takes away from having that extra confirmation, right? So there's a little bit of a trade-off. It's like, do you want to wait for a confirmation, or do you want to just get in and make as much money as possible? And that's where I think, that's the pros and cons in my head. But what I also like to do is say, hey, if I even go down lower to like a 1 minute chart, right? We could also find these patterns on the lower time frames, right? So you can see like Nirvanas and Holy Grails here. And when you use those patterns on the lower time frames, that also allows you to get in even tighter, right? Because you're not, the 5 minute bar is always going to be bigger than the 1 minute bar, as an example.
Right. Got it. Okay. So maybe talk us through a bit more about how you go about drawing and where you go drawing all of your fib levels. Obviously, the first 5 minute bar is a pretty important one. But then once you've worked out of that sequence and you're hunting new sequences, how should we be thinking about finding them?
Okay, that's great. So I like to tell new traders, maximum 3 trades per day. If you do this the right way, you only need to really hit 1 out of the 3 Fibonacci trades to make money, because of the risk to reward is so good. So 1 in the morning, 1 in the afternoon, and you can sneak in an opposing leg here and there. And that's pretty much all that I like to do. You could trade Fibonacci's forever because there's just so much of them. But let's go right here and we can go through. This one would be a really, really good example. So this was back on the 24th. Okay. So again, so we had that first push up, right? Here was our first 10 minutes. You could see that was a clear push up. And I want to go and look at a short example too, because this week the market has just pretty much been bullish. But anyways, so if we go from low to high right here, you could see we came into the 618 and then we traded into a new high. So this is really important because this is where the new traders will buy, right? As soon as this candle is green, it's a big green candle. That's where they get the FOMO. And that's where I'm telling people to sell, because that's normally what institutions are doing. You're buying the dip, you're selling when we make a new high. You don't want to get trapped there, right? So there's your typical morning leg. And then if we drill in here, we can go from this high, take it down to this low. We had this opposing, right? So there's your opposing. And then we go for our afternoon, which we take from the full high down to the low. Oops, it's the wrong one. Full high. Let me just get rid of this. Oops. Oh, one second there. So here we go, high to low. There we go. There, and here was our afternoon. So you could see not all 3 of the legs are going to work. That's not going to happen. We do have that happen, but it's rare. But if you hit if these 2 legs work for you, let's say you're risking $100 a trade, right? So you hit 200, you're up 400, and the last one you lose $100, right? So then you're up $300 on the day for a small account. That's a good day, right? Like that's what we're trying to do. But let's say you're waiting for candlestick confirmation. In this case, we had the Holy Grail on the 618, but notice it never broke the low, right? So sometimes a candlestick confirmation will save you as well, because we never had that low break to confirm to the downside. But yeah, so that's where I like to pretty much divide it into 3. There is so much more, but then you just get confused. So I always tell people just focus on the morning, the sequence, and the afternoon. So let's see if I can find a short example. There hasn't been much shorts lately for this week, but I remember a few weeks ago, here we go. So this is an A plus example. So this is one we took together as well. So this is October 18th. And you can see we had this huge gap up. So first thing on futures, right? This gap up, all of this gap is basically the price action from futures overnight. So if you go to the futures chart, you'll see that it was trending up all night long, right? And that's where the gap comes from. So here's an example of us to the downside. We have this push down instead of up, right? So this one took actually 25 minutes to develop. We do the same thing. So we go ahead, we take our fib from that high, bring it down to the low right there. There's our 618 rejection, straight into the gap fill, right? And this one, so that's our morning leg. And then if I go ahead and remove this, with the afternoon leg is that full range from high to low right there. And you can see this one hit the 618 to the penny, and then this one rolled over as well. So that's like an A plus day when you have everything working out. But what I really try to tell people is it all comes down to the risk to reward. When you let yourself, think about this being zero DTE option. So whenever I recommend options for people, is usually later in the afternoon, zero DTE. So October 18th. So let's say you're playing zero DTE. So this is around 2 o'clock. So after the market has moved down and it started rallying up, the puts are going to decay from 11:40 all the way up to 2 o'clock here. These puts are going to be getting hit hard. They're going to be decaying. You're going to get zero DTE for cheap. So you come in here on that 618 and you try that. And literally, I think this one went for 300%. So that's how I like to combine the options with fibs, but I like to do it in a very particular situation. If you use the options early in the morning, sometimes the premiums will be so high that it's just, you're better off using futures. So like this morning trade, I would use futures, and then the afternoon leg, I could go ahead and use the options.
Got it. So can you kind of talk us through a little bit more about how you go about assessing the initial leg? So in this particular instance, the first leg is 25 minutes, five 5-minute candles, or 6 5-minute candles. Whereas in other ones, it's much shorter. How does somebody who's like really new to this style, who wants to kind of learn it, how do they gain the understanding of, oh, the leg is taken longer than it should take? How do they know when the leg is completed, I guess, is my question.
Yeah, that's a great question. So that's why in the beginning, like I always do, we draw them live in Discord, because it does take a little bit to kind of like understand where the anchors are. And you can see, like, we do them every single day. We draw them live. So that sometimes you need a little bit of help to get to that point. But basically it's very simple, in the sense that if you don't pull back, you just move your anchor lower. So this high right here is going to stay no matter what, right? So for example, like you get to this candle, your 618 is up here, right? But it hasn't come back. So you just keep pulling it lower until it pulls back. So got it. That's what you got to keep doing. So in the morning, you're just moving it lower, and you can actually see, on the first candle, the 618 was hit, but generally the first candle is really, really fast. So we don't really get the first candle. But right after that, you just keep moving it. So we always do it live in Discord. Hey guys, move the anchor down, move the anchor down, move the anchor down, until finally we get the retracement. And some days it's not going to come. Some days it's going to, it's going to be like a trend day. A trend day is where you don't get deep retracements. You just come up, and keep going down, come up and you keep going down, come up and keep going down. In that case, we wouldn't force any trades, because we don't like the risk to reward, and then we would just sit on the sidelines. But usually you're going to get at least one good pullback, right? So anytime so what I love about the fibs, you're doing the opposite of what the chart is saying. So when this is popping up here, it's going up, it's going bullish, a lot of people get FOMO. I gotta buy, the market is rebounding, blah blah blah. But we're thinking, hey, where is the 618? That's where I'm going to hit the short. That's where I'm going to get the deal, 61.8% discount.
Right. Okay. Got it. And then on the kind of the opposite side of that coin, one of the prior examples, price kind of was just kind of floating right underneath the 618, and then it ends up gaining it. What types of things are you looking for to negate your idea? Like to give you the heads up that, hey, maybe this level actually isn't going to hold as an opportunity for a short or a long. Are you looking for immediate reactions at 618, regardless of whether you're long or short? Are you giving it a little time to breathe? I
Yeah.
guess what starts negating the idea for you?
Okay, so 2 points. That's a good question. So the first one we can look at today as an example. Today, as soon as we touched it, you can't even see it on the chart here because this is the 5 minute. But if I were to go down to like a 1 second, you would see when it touches the 618, it just explodes. Let's see what's the lowest we can go to here. So 1 minute.
1 minute.
So yeah, so we'd have to go down even deeper. You could really, really see it. But two things. So if we're doing a candlestick confirmation approach like this, we wait for the candlestick to close. So this
Yeah.
is a bullish Fibonacci. Here's your high, your low, your pullback. If this doesn't break the high, then I'm not going to take the play because that means there's not enough strength, right? And I do a lot of live. So usually like once or twice a month on Fridays, I go live on YouTube. And that's the thing that I show people when we're trading in real time. It's like, all right, there's a Nirvana here. But if it doesn't break the high, like if it breaks the low, then I don't want to be a part of the trade. So that's how you can use the candles to help guide you, right? Or on the other end, you can just trade it like a robot. And when you have a lot of size, I think you need to trade it more like a robot. We just take it because we know the risk to reward is there. We know we're going to be wrong sometimes, but we know we only need a 34% accuracy, right? And that's what I like to do. I just say, all right, here's my first push up. I have my orders waiting. And that's the good thing about the Fibonacci is when we're up here, your orders are waiting. So it's like you're waiting to be filled. It's like, come to me, right? So on the way down, you get filled, you pop right back up. There's no better feeling than that. And
Right.
I think you just, at some point in trading, you have to be okay with losing. And we've gone through periods of times where, we won 10 in a row or we lost 10 in a row. But when we win those 10 in a row, let's say we're making, 20 grand. And when we're losing 5 grand. So we're always risk to reward first and foremost. And that's why I love the fibs, because that's already built in. It's already in the system because we're always buying the pullback. The moment
Right.
you start chasing things is the moment now you're saying, hey, well, I'm trying to make $100, but what am I really risking? Well, I don't even know what I'm risking, because when it starts to go the other way, what happens? You average down
Right.
and you're just like, well, I'm just going to hold this now. I'm a long-term trader. And then
Mhm.
one month later, your account is blown up. Right.
Right.
So that's why I don't like trading, that breakout style.
Got it. So we've got a couple questions from the audience that have
Yeah,
come in.
sure.
First question is, do you always use the 5-minute chart when you're finding where to place your fib levels? When there's more volatility, do you use a higher or lower time frame?
So yeah, I recommend the 5 and the 3 minute. So I use both.
Okay.
I think the 3 minute, like you could see a little bit more detail, but it is a little bit more faster. So let's go ahead and draw it up on the 3 minute. You could actually see a lot more detail here. So you could see the first 618, we had that bounce, like you could see it bounce twice off the level, but on the 5 minute, you're not going to see that. But the 5 minute, I think it's better for new traders because the 3 minute, those candles are going to be too quick for you to actually input your orders. But the more you trade it, the more the price action will slow down. So like when I'm trading, the 1 minute chart is slow for me. If the 1 minute chart is not slow for you, then you just need more screen time. So I would recommend that you kind of go back to the 5. You can also do these on the hourly chart. So, I love to trade on the hourly chart. Let's just go ahead and look at some of the recent fibs right here. So you can see we had, this was our last big low, October 13th. And if we go ahead and we draw a fib from there, we take it up to this high. So that's pretty close to a 50% retracement, I would say. And then that was pretty much with that Holy Grail, right? So you had the confirmation with the Holy Grail pattern as well. This is the ultimate for new traders. If you can't day trade because it's too fast, then go to the hourly and start drawing up your fibs like this and start looking for those setups, right? And then even if I were to flip this here and we draw the short, so I could go ahead and I could draw the short right here. Here's our high. Here's our low right here. You could see right here, this is the 618 on the short, and there's another Holy Grail that took us to a new low. You could even do this. And I used to do this when I first started trading, but the only downside to this is sometimes you have to hold it for multiple days. And you know how this market is, holding things for multiple days is pretty crazy. And,
It's
if you
tricky.
even, it's tricky. And even going from this low to high right here, you could see we had that 618 right there. So there's another perfect example. Like it's almost to the penny. And you just wonder like, why? Well, why did the market just gap up from here? It's because there's so many algos involved doing different things. And that's what I really love the Fibonacci for that reason. It's just, you can make it work, whatever situation you have. If you're an investor, right? I can show you hundreds of examples of big retracements on big names, and then they just rally for years and years and years. If you're a day trader, if you're a swing trader, it can work for anybody. And that's why I love it so much.
Right on. Yeah. Another question for you. When you give your followers a setup for SPY options, how do they know the level to preset stops and limit orders?
So whenever your stop loss is always at the swing low, right? So for an example, today, this was the chart from today. So you can hover over that 930 candle. The low is 3834.25. So that's where your stop is. That's if you're using futures, right? If you're using options, there's two ways. The first way is if you're doing zero DTE. So if you're doing zero DTE, what I recommend is trade with small size, but risk at least 50% of the premium. Because if you don't give it enough room, you're going to get stopped out quickly. So for example, let's say, I'm putting $200 on calls. If it goes below 100, I'm out, or I'll just risk the whole premium. So I'm risking $200. It's either going to be big shot, a home run trade, or it's going to go to zero, right? Or the other option is use the candlesticks for your stop loss. So as soon as this breaks the low, let's say you lose 37% on the calls, then you exit that, right? There's a lot of ways to do it that are fully mechanical. For example, conditional orders. So I know you guys are working with interactive brokers at some point, but that's what I use. I use conditional orders. So for example, I could say, all right, if this low breaks, sell my calls, and it'll just do it automatically. So, that's a little bit advanced, but I love to use conditional orders also.
Now, are you getting out of the trade the second that the price breaks that level? Are you waiting for a candle to close? How does that work exactly?
When it comes to futures, I don't play around. As soon as it touches, I'm out. I don't care because with futures, like I said, it's margin. And, if there's a big red candle that keeps coming down, instead of losing 100, I could lose 200. And that destroys my risk to reward. When it's options, I'm more flexible, especially Lotto Fridays. I go for big plays. I try to make thousands and thousands. In order to do that, you pretty much have to risk the premium. So with options, I'm okay. Like, hey, I put in $1,000 on calls today. If it goes to zero, I'm okay. But what's my upside? Maybe 2, 3, 4, 5,000 plus. Sometimes on a Friday you can make 500%, 1,000%. But I'm always thinking that the risk to reward has to be in my favor. And with futures, there is no like, hey, I'm going to let this go to zero. There's nothing like that. If it keeps going lower and lower and lower, it can go lower for multiple days until the point where your account gets margin called. And that's what we don't want to happen.
Right. Can you, another viewer was asking if you could explain kind of more deeply the Holy Grail pattern.
Yeah, sure. All right. So we'll go back here to SPY. So go here. So, the Holy Grail, I think, is like one of my hidden secrets. And I really, really recommend everybody watching to take your favorite stock, Tesla, Apple, whatever, Bitcoin, take whatever you love to trade. Go to the 5-minute chart, go to the 15, the hourly, and the daily. Look at all the Holy Grails and find the win rate. Because I've been tracking the Holy Grail for a long time, and it's a very reliable pattern, very, very reliable. So here's an example right here. What I like about the Holy Grail, in this case, this is actually like my final form pattern. This is a Ragnarok, which combines both of them together, inside, outside, inside. But at the end, it's the Holy Grail kicker. So, what I like about the Holy Grail is that first bar is always going to be an outside bar. And the outside bar is always a trap, because the outside bar, it breaks the low and the high of the previous candle. So anybody that tried to short here, so let's just hover over this. The low of this candle was 383.52. The low of this candle was 383.50. So it made a new low by 2 cents, and then it shot right back up. So how do you think the shorts are feeling off of that, right? The shorts are going to be like, hey, man, I got scammed right here. I went to short and this thing just changed on me. And then the next candle is an inside bar. So it's a pause. So that pause allows you to enter the trade with good risk to rewards. You say, all right, I know the shorts are trapped over here. If it breaks the high of this inside bar, I'm in, and I'm going to put my stop loss on the low. And this is about a 3 times your money trade. And that's why I love the pattern so much, because the first bar, the outside bar, traps people. Then the inside bar gives you a good risk to reward entry. But even if you don't trade the Holy Grail Nirvana, you could just trade inside bars and outside bars. But I don't just trade every single one. I love to see them with a combination of a fib. But the Holy Grail and Nirvana, I could trade it by itself, because I think those patterns are good. You could just even look at this week. We've had Nirvana here was a winner. Nirvana here was a winner, winner, winner. This one, I don't take anything an hour into the close because usually you can just get chopped up. And then here was our Ragnarok today was a winner. So, I always track these things for my personal, just to understand where we are with the patterns, because I want to make sure the patterns that I'm telling you guys actually work. But I really recommend that you guys go ahead and take these patterns and test it on anything you want, right? And see what the results are.
And you can actually use the TrendSpider back tester to test these. Now, are these all long biased patterns, or are they can they be short biased patterns too?
Yeah, so if you're using them without a fib, it's a neutral pattern. So there's your inside bar. If it breaks the low, you short. If it breaks the high, you go long. And that's what I like about those patterns, because you don't have a bias, right? And that's what I use a lot on the day trade. So for example, we go to Starbucks today. So Starbucks, let me just pull this up real quick just to show you guys. On Starbucks today, I was able to make, I think it was like $3,012. And so let's just talk about that quickly, like how I was able to do that. So first and foremost, the market scanner is my number one tool that I use on TrendSpider, because it helps me to scan for my pattern on the daily chart. So if I go back here to Starbucks, we can go to the daily chart right there. And you can see yesterday we had an inside bar, right? So inside bar is one of my go-to for scanning. I love stocks that close with a daily inside bar, and then I like to take them the next day because generally there's a lot of volatility. So you can see right here, went on to the 5-minute later on in the day, right there. And our long trigger was on Starbucks. Let me just pull it up. So I also post these for free every night. So make sure you follow the Twitter. 85.81. So 85.81 was right there, right around there. And you can see we broke that in the morning. We got our 2 legs up, and then we sold pretty much near the highs. And guess what? If I take a Fibonacci and I just stack it on Starbucks, low to high, guess what we have here, guys? Right on the 618, right? So that's why I love it, because it literally, you could use it on anything. Okay, so
you're
really nice.
You're buying the close of the previous day because it was an inside bar, right? You're buying the break of the close of the previous day.
Yeah. So with the inside bar, so you could see here, I have a long level and a short level. So 85.81 and 84.29, because I'm looking for a breakout. So 85.81 is right here where my mouse is. That broke in the morning and I went long. If Starbucks broke to the downside, I would have taken it to the downside. So that's why with those bars, I'm always neutral. And I'm actually fully automated on those trades. So any one of these stock trades that I have here, I actually put them in my broker every single night. So hopefully with TrendSpider, my goal is that I could actually set it on TrendSpider on the chart eventually, and just like set it up, and then I can share my screen with everybody and say, hey, like, these are my orders for the night. This is how it looks on the chart. So that's something that we're working on in the future as well.
Oh yeah, you're going to be able to do that. So for the trader who kind of missed the initial breakout, what's interesting about your fib strategy here is that it actually gave them a second opportunity if they happen to miss the initial long on the open.
Yeah, and I dare anyone, from my experience as a trader, do 100 Fibonacci trades, do 100 pullback trades, and look at your profitability when you do those 100 trades versus whatever you were doing before. And like, it's a challenge. I literally call it the 100 trade challenge, because when you get through 100 trades where you're always being patient and buying the pullback or selling the rip on the short side, you're going to see your profitability is going to double or triple, because you're always going to get a good deal. And it's even more important for option traders, because option traders, if you buy on the way up, the call premium is going to be too high. But if you let this come back down right here and you get it on the dip, you're going to get it for a good deal, right? So that is like even a bigger bonus for option traders using the fibs. It has that synergy. And that's literally why, my book is called the golden partnership with Fibonacci and automated options trading, because it's a partnership, because you need something to buy a pullback with, so you get the premiums for cheap, right? It doesn't really matter when you're trading futures that much, because it's just, points by points by points, but nonetheless, everybody still wants to get a deal. You don't want to overpay for something when you watch it go back down. And the best feeling as a trader is when you buy the low and it just explodes up. Like when we bought this morning and it just ripped up like this, there's no better feeling than that. You feel like a god.
Yeah. That's very true. That's very true. Well, we got about 10 minutes left. So if anybody has any more questions, get them in. If you, again, we have that 35% offer. It's available for the next 10 minutes. So if you're interested in it, take advantage of it now. Rich, a couple other questions for you. What moving average, and I know it's not quite a moving average, but we haven't talked about the green cloud that's on
Yeah.
your chart.
Yeah.
Tell us about that.
Yeah, so that's the Bollinger Bands. I only use it on the higher time frames, the weekly, monthly, and it's for long-term plays. It's a totally different strategy that I use
Okay.
for like investing and stuff like that. So, you know, for example, if we go ahead and we look at SPY here, so you could see, you know, this was the 50% retracement, which also lined up with the bottom of the Bollinger Band. So it's like a little extra confirmation. And a lot of the times you'll see with the 618 retracements on the higher time frame. So if I start off from the, you know, the full high of the last year, 2021, you could see a lot of the times the 618 will line up with the mid Bollinger Band on the higher time frames. And you know, what I love to stack it with is if we have a three-pronged attack, we have a 618, we have a mid band, and we also have like an inverted hammer shooting star. That gives you like triple the confidence that, hey, this is going to be a potential pullback right there. And you could see if we just focus on the weekly chart, you could see even if I take it from this last high down to this low, we've just been doing 618s all day long, 618s, and we still have some room to get back up to the 618 of the last of the last swing right here. If I just take it, you know, we're pretty much close to 50, but the 618, we still have some room there. So these are just higher time frame tools that I use. And to be honest, if I don't have it on my charts anymore, I feel like it's naked, but I really don't need it from a day trading perspective.
Gotcha. We had somebody else ask, does this strategy work on SPX?
So
Which I would
SPX
assume,
and
of course.
SPY and ES are all the same, right?
Yeah.
So they're all the S&P 500. So if I go to SPX today, you'll see
It would be a dollar sign.
Oh, SPX at the beginning, SPX
Yep.
like that. Oh, there we go. Yeah. So, oh, I didn't sign the agreement, guys. But anyways, yeah. So I don't personally use SPX. I either do options on SPY or use futures, but they're all the S&P 500. So the S&P 500 has different tools. You can use futures, you can do the ETF, you can do the options, you can also do leveraged ETFs like 3 times bullish, 3 times bearish. I used to day trade those back in the day.
Got it. Got it. Well, any other questions from the crowd? We got a few more minutes left. You know, in the interim, while we're waiting on questions, anything else that you'd like to kind of share?
Yeah, I want to say that, you know, what I love about TrendSpider is the market scanner. This is a go-to. I do this every single day on stream. So for example, my patterns like the Holy Grail, right? If you want to go ahead and find the Holy Grail on the daily, you can go ahead and scan like that. It's that simple. And you could look for plays that have those setups, right? So here's a Holy Grail on PACCAR. I don't trade these ones, but you know, I look for specific stocks that I trade, but if you're interested, you could do that. And then even the Nirvana, we got Dan that did one here on the daily. It scans pretty straightforward, and I find that really revolutionary. Another thing I love to use is the blue raindrops. We could talk about that another time, but I always scan for these. Nike, nice blue raindrop going into tomorrow. You can see the last one was October 10th, which had a nice rally. So I do my daily scans, and that's how I come up with the picks that I post every single night. It's from the scans that I use in TrendSpider.
Yeah. So how for somebody who isn't a TrendSpider user yet, but maybe they're taking advantage of the deal tonight, how do they get their hands on these scans?
Yeah. So I think once they sign up, I think you just let the team know you want to join the Trading Warz affiliate, and they'll send you the scanners and set you up. So I have my whole sidebar thing that I do here, and Dan actually helped me set this up. I find these tools really, really good, and I love using TrendSpider for finding the next big place. Like, so for example, last week we had Starbucks. I believe it was Starbucks. Let me see that we scanned on the weekly. Just make sure. Yeah, so we had the double inside bar pattern on Starbucks on the weekly, and there, you know, at the beginning of the week, we caught a nice short that went for 100% on the puts. And, you know, that's just the power of the scanners, because otherwise you're just going to be flipping through charts all day and all night.
Are you using the auto fibs at all, or are you just drawing them all manually?
Yeah, I do them manually. Sometimes I don't agree with the anchors, but you know, this one is a good example. This is like a big picture anchor.
Right.
For day trading, I think for the bigger time frames like the weekly and monthly, the auto fib works really well. But for
Okay.
day trading, I'm just really trying to look at the price action individually based on like the first 20 minutes or so. And sometimes it'll take the previous day, which I don't want to include.
Right. Right. Because you're moving it literally with every single candle in a lot of instances, whereas the auto fibs are going to adjust based off of the new swings that
The
occur.
bigger anchors. Yeah, exactly. No, this is good though, definitely for the bigger picture. And like even if we go to SPY here and we have our, check that out. Like that's pretty solid. Like that's the same fib that I drew today with the 50, right?
Right.
So I love it for that. But then if I were to go down to like a 5-minute chart or a 10-minute chart, let's say with the candles, and then I like this auto fib is trying to look at that the bigger picture over the last
Right.
few days, whereas I'm just trying to go and hammer it in the first 10 minutes, you know. So
Right.
that's the only reason I don't use it from a day trading perspective.
Got it. And then just to confirm again, a Nirvana is an outside bar and then an inside bar. A Holy Grail is an inside bar and then an outside bar. That's correct.
That's the other way around. So
Oh, it's the other
Holy
way around.
Grail outside, inside, and then Nirvana inside, outside. So the yellow highlight is the Holy Grail and the blue highlight is the Nirvana.
Got it. And then there was a third, Ragnarok.
Yeah, so Ragnarok it's just basically when they're combined together. So
Okay.
when they stack on top of each other. So if I go to the 5-minute, you'll see one today on SPY. So that's basically, it started off as a Nirvana and then it became a Holy Grail at the end. So it's a 3-candlestick pattern. So that's
What's the
extremely rare.
significance?
It's really rare. Like you don't see it. It's the same thing in terms of like it's a consolidating pattern looking to make a breakout. So you could see we consolidated for 3 bars and then we broke above the high and we squeezed. That's what we're looking
Right.
for with all of the patterns. But the Ragnarok is just means, hey, for the last 15 minutes, people have been getting trapped. We have a little bit of a better chance here that we're actually going to make a directional move once we break.
Got it. Okay. That's good to know.
But you
What
also
else?
want to be careful. I'll say, make sure you're using the patterns on high volume stocks, right? Like if you're trading it on something that doesn't move at all,
Right.
every single bar is going to be an inside bar, right? And people ask me that all the time. It's like, hey, Rich, a triple inside bar, but no one actually trades that stock, right?
Right.
So if you see it on the index or if you see it on Tesla, then it means a lot more because there's so much more volume in that actual candlestick than when you look at something that no one trades.
Right. Well, Rich, I know that you've got to get moving to your next live presentation here in a few minutes. We thank you so much for being with us tonight. Where can everybody who's tuned in, where can they find you?
Yeah, so this is really, really good point that I just want to bring up here, guys, is my YouTube channel. So everything that I talked about is literally on my YouTube channel. All of my strategies are on my YouTube channel, step by step. So basically, guys, I have almost 600 videos on my YouTube channel, and that's where you want to go in order to get the education. So let me just go ahead and pull that up right here. So I have a full futures course. I have a full Fibonacci course. I have every single thing you could think about right here on my channel right there. So I'll just go right here and show you guys. So everything from live trading to every week I do a full recap on all the trades we took. So if you're serious about learning, this is the best thing I can do for you guys. So just check out the YouTube. You can learn everything. It won't cost you a dime. And my philosophy will always be the same. If you learn something from me and you make some money in the market and you want to support me and buy a copy of my book, then go for it. But I don't want it the other way around. If you don't get value from me, then that's fine. You can just move on. So I always try to give everybody, like everything I talked about there was no secret sauce. I told you pretty much everything that I do on a day-to-day basis. So, check out the YouTube and check out the Twitter because every day I post free picks. And I do free recaps every single day. So make sure you guys check out those two. That's where I'm at. And, I might as well say this, but there's a lot of scammers. No WhatsApp, no Telegram, no Bitcoin, none of that. And, so if anybody approaches you about any of that, that's definitely not me. I can only be found at tradingwarz.com.
Got it. Right on. Well, Rich, man, thank you so much for your time. Thank you for your knowledge. We really appreciate it. And everybody who's tuned in, thank you so much for tuning in. We really appreciate you being here. So that's it for us tonight. I'm going to be live again on Monday at 12 p.m. Eastern time. We're doing a little lunchtime session. We've made some awesome new improvements to our back tester, and I'm going to be going over a full demo on our back tester. So if you're a TrendSpider user and you're interested in learning more about our back tester, come hang out with me next Monday at 12 o'clock Eastern time, right here on YouTube. And until then, we will see you again soon. Rich, again, thank you so much for being here, man.
Thanks.
We really
You guys
appreciate
should
it.
back test the Holy Grail. Let me know how it goes.
Yeah, maybe I'll do that.
Yeah. All right, guys. Thanks so much for having me. I appreciate it.
All right, brother. Have a great night. Have a great night, everybody. We'll see y'all soon.
Take care.